Hey there. I just wanted to review my trades from this week very, very quickly. I spoke on this earlier in the week, but there was a daily fair value gap that I was waiting to be tapped in order for me to begin looking for a buy. And look what we have. We have, so the gap, the fair value gap is formed when price, the high of this candle and the low of this candle is what I'm identifying this gap to be. Let me clear this out so we can just see it very, very clearly. You see that? The top of this candle, the bottom of this one, that is a gap in price. And judging from this wick, I kind of understood or was waiting for it to tap into this gap because it recoiled or retraced pretty quickly. And so I was waiting for that price to tap into that gap. You drop down to the 1 hour to reveal the characteristic of price that I was looking for. So all of this was very bearish. And then boom, we get a bullish candle, which is a signal for me to begin looking for a buy. The stop loss was very minimal, about 3.5 pips, because I only needed enough to cover that candle. If it went beyond that, then it was not going in a direction that I wanted it to go in. My exit point is the previous 1 hour high. So I got out here. Because as you can see, price moves fairly quickly and you could be in profit in one instance and not in profit the next. So I just got out of that trade, and that was, I think it only amounted to about 60 pips accounting for the spread. So that was my first trade. And then look at this. This was a news candle. There really is no such thing as news candles. Price is going to get to its delivery point when it's intended to get to its delivery point, right? It's all basically an algorithm. And so it will psych people out when it does things like this. I just wait on the sidelines. So at 7:30, when this news hit, I was unbothered and unscathed. I said, okay, I'll wait for this hour to go by. And then I'll wait for the next hour to go by to see what the next candle gives. And what did it do? It changed characteristics in terms of value. So that in terms of direction. So this was an indication to me that I need to look for a sell. Now, I'm definitely going against the grain because not only is it a bullish week, it is a bullish day. And this was a very, very bullish hour. But look what we have. A fair value gap on the hourly time frame. So at a minimum, I'm going to set my stop loss at 9 pips once I drop down into a lower time frame to find this entry. And where am I going to sell it to? Into this gap. Another 30 pips. So we're at what? 90 pips for the week. Okay. So there, I'm just very patient and I look for the things that I know have been consistent for me. So price taps into this fair value gap, which I think I've referenced time and time again. I only trade fair value gaps because that is the only thing that consistently works for me. And look, it went from bearish to bullish again. This right here is an indication for me to look for a buy, drop down to a lower time frame, get in it. Again, I only covered the price. I only covered the stop loss, which is the bottom of this candle, and just a little bit of clearing. It's 7.5 pips, but really and truly, I can set all of my stop losses to 9 pips and walk away peacefully, honestly and truly. Where is my exit? There is a very, very old high, a 1 hour high from, I want to say almost a year ago that is resting up here. I mean, it is really, really old. I'm talking July 17th of last year. And so that is my potential exit point. So this trade right now in total will be 91 pips. So let's say we got 85. So now what are we at? About 150 pips for the week. And then I was able to get an entry today. I probably won't leave this open during the weekend just because it's a very small trade. It's only about 20 pips. And there's no need to pay a spread cross oh my gosh, a spread cost over the weekend if you don't have to. My goodness, say that fast a couple of times. So I'll probably close this trade. So we're at maybe 170, 175 pips for the week. And depending on your lot size, that can be $100. It can be $1,000. It can be $10,000, depending on the lot size that you use. My goal on a weekly basis is at least four figures. So, I mean, we didn't do too bad this week. I had four trades, all made money, no losses. That is not always the case, but I do absolutely minimize my loss. I think here you can see my stop loss is 9 pips because this trade, if I'm being honest, was kind of entered in the middle of nowhere. It didn't tap into a fair value gap. It was just that it was already bullish. And so I just kind of went for it once I dropped down to a lower time frame to see um, if there was a potential entry. There was. I'll probably just close it because, like I said, I'm not going to leave this open over the weekend and pay a spread cost. And it's already in profit, so I might as well just close it. So that has been my week in review for trading. You can already see that I have the previous day, which when the market reopens, this will be previous day. I already have my low and my high marked off for Friday. Um, I'll probably redo this markup Monday morning after Sunday does its thing, the market opens and all that good stuff. I'll look at it again and mark up the highs and lows, see if it runs a previous day high, right? That's what I do. I see if it's running a high or a low and assess where I think it's going to go from there. So this has been my week in review. Um, so yeah, I will see you guys soon. Take care.